What is a student loan? It is not always what you think it is. Do you really know what it is really, or is it something different than you actually think? Some people think student loans is something they can just get. They don't have to worry about it. I can pay it when I want to. If I'm not working, I don't have to pay. Or some young people think, oh, I didn't finish school, I don't have to pay the debt. And they're actually surprised when the federal government sends them a letter that their loans are in default, or the first income tax check they get, the federal government keeps it. They're actually surprised. So understanding what a student loan is, I think, will help you not be scammed. Because when you understand how it works, somebody cannot tell you something fraudulent and you be going, oh, I know that's not true. Because all I have to do is go to the education website, to student website, and check it out with my ID and find out what my options are. Repaying student loans is hard enough as it is without having to face some insane things that we find going on. Paying for school can be a big undertaking. Understanding the difference between federal and private loans and your consolidation and repayment options can save you thousands of dollars. I'm going to re-emphasize that. Understanding your options, paying them, or the types of loan they are, can save you thousands of dollars, because some loans have more benefits than others, and some, if you consolidate them, you lose some things that actually hurt you in the long run. And this next paragraph is what the scammers do. Some companies promise to help reduce student loan debt, but there's nothing they can do for you that you cannot do for yourself. And some of the companies that promise student loan debt relief are actually scams. And it's illegal for companies to charge you before they help you. That's the most important thing to understand. The federal government has made provision for us to be able to get educational funding for school. And this paragraph says there are several types of aid available to help you pay for your education beyond high school, including grants and scholarships, federal work-study jobs, student loans. The first step is to complete the free application for federal student aid. It's on FAFSA.gov. So when you go on that website and you complete that application, that is your first step into the loans. But as you notice in this paragraph, it mentions more than just loans. There's grants and scholarships and federal work-study jobs. So look into these options as well. What you want to do is to try to keep your loans down to a minimum. Completing this application is very useful. You will need it to get into college. To get any kind of financial aid, you will have to complete this application. And your state, too, will look at this application to determine if you qualify for any kind of state aid, or as also your school will. Now, once you get your ID, when you log on, you complete the application, it will give you a username and password. So you will use that to get into the federal student aid system, to fill out your FIFA form, I guess that's how you say it, legally sign your student aid documents. Only you can create and use your FISA ID. Don't share it with anyone. And this is what happens to people who get scammed and they give them this information. They actually log on to your account and change the information there, so you don't even realize these people are not paying your loan, because they discourage you from contacting your loan servicer or going and logging on to your account. Now, there are grants and scholarships. I mentioned that before. This is what they call free money. They should be your first choice to finance your education. So if you're in high school still and you happen to be listening to this or whatever, look into what opportunities your school offers to help you towards your education, because you can go to your financial aid. You can the financial aid office at the college or career school that you've chosen. They can help. Your high school and your counselors. U.S. Department of Labor, they have a free scholarship search tool. And federal agencies, your state agencies, go on their websites. The local library, I found a lot of information in the local library. And you can have organizations in your community that offer scholarships. You know, it's interesting how many religious organizations or even some businesses and civic groups actually offer scholarships each year. And organizations related to your field of interest, whatever you're in. Like me, I'm in IT, so I found some that were related to women in the sciences. And you have some ethnicity. If you're African American, Hispanic, or whatever, there's a lot of organizations that will offer you financial aid because you are going to college, and your employer or your parents' employers. So it just depends. There are a lot of places you can look, but you have to look for this money. I strongly recommend you use every available resource to keep your student loans debt low. Now, the federal work study program, it states here, work study is a need-based grant that requires you to work part-time while you're in school. To qualify for work study, you will need to fill out your forms as required on the website for your student loans, and then they will determine. And you only get paid for the hours you work. So I worked when I was in college, so I used this as well. Student loans fall into two categories. You got the direct loans where the U.S. Department of Education is the lender. Then you have the federal family education loans where private lenders make loans backed by the federal government. So these loans come from private companies, but the guarantor on the loan, if you default, the federal government pays that debt. Federal Perkins loan, these are low interest federal student loans for undergraduate and graduate students with exceptional financial need. So this helps people who have really serious financial issues to be able to send their children to college. Now you have the PLUS loans. These are federal loans that graduate or professional students and parents of dependent undergraduate students can use to help pay for college or career schools. Now, the private loans, sometimes called alternate loans. Now, these are not like the Perkins loans. Don't get them confused. The private loans, sometimes called alternate loans, are often by private lenders, like the Perkins loan, like banks and credit unions, and do not include the benefits and protections that come with federal loans. So the Perkins loans is a lower interest rate. These private loans, the interest rate may be a little high, because when I went to college, this is mostly what I had. I had the direct student loans and the private loans, and then I worked on campus as well. Now we're going to talk about loan repayment and forgiveness. Student loans are debt you have to pay back, even if you don't finish your degree. But depending on your situation and what kind of loans you have, you might be eligible for a different repayment plan or to get your loans forgiven. Now, understand, when you talk about getting your loans forgiven, this is not like the scammers out there who claim to be able to get your loans forgiven. The federal government has certain stipulations that you have to meet to do that. And then when it comes down to qualifying for these programs, you have to submit the paperwork. And there's nothing a private company can do for you that you cannot do for yourself for free. And it actually will be processed, as opposed to some scammers just taking your money. Loan payment and forgiveness in federal loans, you can find the information on the federal government's website, and they give a couple of places you can go here. You can talk to your servicer, or you can go to studentaid.gov/repack. And this little paragraph mentions how to get out of default. Well, I put that information in here. So there are income-driven repayment plans. That's your monthly payment is based on how much money you make. And then you have the deferment and forbearance. You can postpone making payments if there is a good reason you can't repay right away, though interest may cause what you owe to increase. That's what happened to me. In the times that I had them in the 80s, the forbearance process just stopped the payment, but the interest continued to grow. So it's not like it freezes your loan. If you have a $9,000 loan and you have it in forbearance for a long time, it can go up to $10,000 or $12,000 in a little bit of no time with just the interest. Now, loan forgiveness or loan discharge. In some circumstances, you don't have to repay some or all of your loans. This is what all the scammers promise. You might qualify if, for instance, you work for a government or non-profit organization, or if you become disabled, or the school closes down, or they commit fraud and the federal government shuts them down. So under certain income-driven repayment plans, any balance that remains after 20 or 25 years of payment is forgiven. You see what it says, under certain income-driven repayment plans, not all. So the 20-25 years is real. In some cases, you may owe income tax on the forgiven or discharged part. Say, for instance, you owe $50,000 or $100,000 student loans, and for whatever reason you qualify for this plan that will eliminate the bulk of that debt. Okay, see, so the IRS will contact you. Say, for instance, they forgive you $75,000, where you may have to pay taxes on that $75,000 that you didn't pay on your student loan. So these things, these scammers be offering, it's real, it's part of the process, but what they don't tell you is there are various requirements that they don't require you to meet. Now, this is the part I added. If you fail to make your payment on your federal student loan and now are in default, don't let this affect your financial future, because it will. If your student loans go into default, it goes on your credit report. And if you need to get a job and they run your credit report and you have your credit score is really low and you have all these defaulted loans, it's going to be hard to get a job. And this is found on the studentaid.gov website here. The link is here, and it says one way to get out of default is to repay the default loan in full. I did something similar to that when I got my job. The amount of money that I owed left, I borrowed it from the credit union and paid the loan off. It was actually cheaper for me to do that than to keep paying that interest. But that's not practical for most people. The two ways to get out of default are loan rehabilitation and loan consolidation. As it says on the screen, while loan rehabilitation takes several months to complete, you can quickly qualify for loan consolidation. However, loan rehabilitation provides certain benefits that are not available through loan consolidation. So when you're getting out of default, you need to go to the studentaid.gov website and figure out ways to get it done correctly. Now, private loans are a little different. You know, you have very few repayment options, and most of the times there's nobody going to give you any forgiveness or cancellation. So what you want to do is contact your loan servicer directly. If you don't know who your private student loan servicer is, look at your recent billing statement and give them a call to try to work out something. But more than 9 out of 10, it's not going to be loan cancellation, but they will try to work out some kind of payment plan with you. But you want to do that because you do not want it to go on your credit report. Now, this portion is about loan consolidation. You know, your student loans, you can combine them and simply into one payment, but sometimes when you consolidate your loan, you get a brand new loan and new terms, and sometimes that's not good. As the next paragraph says, if all your education loans have fixed interest, it may not matter. But if some of your loans have variable interest rates, when you consolidate into a fixed loan, may affect the interest rate of your loan. So if, say, for instance, you have a loan rate that's 4, and then when you consolidate it, depending on the variable rates you have, when you consolidate it, it can go up to 15. So these are things. Now, your federal loans, consolidated loan with federal government is free. Do not get fooled. You don't pay a fee to consolidate your loans. We said that in our little overview part. This is like repeating. I'm repeating this loan consolidation stuff because it is so important to understand. Consolidating with the federal government is a process you can do on your own at no cost. When you consolidate your federal student loans, you get a direct consolidation loan. And as I said before, there's a fixed rate of interest on the loan being consolidated. So you have to be careful what you're doing. to know how you're doing it. You should make sure that it makes sense to consolidate your loans. You know, a Perkins loan borrower have unique deferment cancellation rights that may be lost when you're consolidating. So you want to weigh that interest rate out, because it's better to have an interest rate of 4% than to have an interest rate of 25%. Your payment is going to definitely be way lower. Now, here are some pros and cons of consolidating your loans. One is, if you currently have federal student loans that are with different loan servicers, consolidation can really help. Consolidation can lower your monthly payment by giving you a longer period. Look at this right here. What did I say earlier? Look at that time, 30 years to repay your loan. That's a house. And that loan is probably going to cost you as much as a house. So get as less amount of money for a financial aid situation that involves student loans. Financial aid comes in many forms, but the student loan component can cripple you later in life. If you consolidate your federal student loans, you might get access to additional income-driven repayment options. So you want to weigh out all of those income-driven ones. There's a lot of gotchas in that there's a lot of options to consider. You will be able to switch any variable rates loans to a fixed rate. So that's a good thing. If you got a 25%, variable rate that fluctuates, one year is 19, another year is 25. So at least this way it'll fix the rate, and then your payments won't be going up. Now, this is the cons on doing loan consolidation. It's going to increase the time it's going to take to repay the loan, because now you got more involved, and it's going to be, the interest rate may go up on you. Consolidation also because you lose benefits associated with your current loan. And if you're doing an income-driven repayment plan and you're trying to meet those 12 payments you have to make to maintain that status, you will lose that if you consolidate. There is another option you can think about as opposed to loan consolidation, and that is deferment and forbearance, or as I said earlier, income-driven payment plans. That's all good, but you need to understand how it works for you. Both of these, deferment and forbearance, it is a temporary situation. So you would go to your loan servicer and discuss this. This is for federal loans, not private loans. And they will help you work out your budget, look at your income, and go through all the various scenarios. Many of these scam people for getting rid of student loan debts offer this, but it's not a guarantee. You have to meet the various stipulations involved, but sometimes we get so desperate we actually believe these people can do what the law and the rules regarding student loans do not allow. So private loans, you will get companies who will actually contact you. Like it says here, private loans have to be consolidated with a private lender. So you can't go to the federal government to consolidate your private loans. You would have to go to a bank or some other institution. There might be a cost when you consolidate, but avoid companies that tell you to pay up front. They are not legal. Make sure you understand all the conditions of your consolidated loan before you agree to consolidate. Take your time to determine whether consolidation is right for you, because sometimes consolidating all of those little private loans may save you from making all these little money orders out every month, but the terms may cost you in the long run. Some debt relief companies and lenders offer to consolidate federal and private loans together into one new loan to lower your monthly payment or interest rate. Don't do it. Consolidating private and federal loans turns into a private loan, which means you will lose the federal repayment benefits and protections of your federal loan, such as deferment, forbearance, income-based repayment plans, and loan forgiveness. Do not do this. Before you consolidate your loan, find out what it could mean for your specific situation. And they've got a Department of Education consolidation information phone number here. What is a student loan? Do we really know? And a lot of times I don't think we do. I know I did so much research before I went to college because I was an older student. But I know one thing, student loan debt is crippling. I know it took me 20 some years to get mine paid off. So I encourage you to get as less financial aid in the form of a student loan as possible to accomplish your educational goals. Thank you so much for visiting my channel, and have a great day.